Welcome back. Well, let's focus on some primary market action then. Smartworks Coworking Spaces, 580 crore IPO opens today for subscription. They have set the price band in that vicinity of around 387 to 407 rupees per share. They've also raised 174 crore rupees from the anchor investors. Let's discuss a little bit more on the IPO offering. We've got Harsh Binani, the Executive Director, and Nitesh Sarda, the Managing Director at Smartworks Coworking Spaces, who joins in. Hi, gentlemen. Good morning. Welcome to the stock markets and all the best for this issue. Well, let's get a basic point out of the way first before we discuss more about your business model. You're raising some money and you said you're going to be reaping some debt on that front. So tell us, what was the debt before the IPO? Once you get done with it, what does the debt come down to? And effectively, what would be the rough interest savings?
Thank you, Nigel. It's a momentous day for the company, and thank you for having us here. We are very grateful for the overwhelming support. Yesterday, we had a big anchor allocation, and we are now opening it up to public. The IPO of ours will have a primary raise of 445 crores, which will include 114 crores of repayment of high-cost debt, and the lion's share of the balance will go towards our expansion. In a post-IPO environment, the net debt of the company, which earlier stood at 299 crores in March 31st, 2025, we also had cash balances of 100 crores. Once we repay this high-cost debt of 114 crores, the company is actually going to become net debt positive.
Okay.
And today, we are very excited, especially because, as we've seen, Morgan Stanley widely reported that India is going to be the office to the world. Today, our Prime Minister Modi ji has an ambitious vision of making the country a developed economy by 2047, where the economy is going to grow to about $30 trillion. You can only imagine how much the requirement for office spaces is going to go up during this period of time. And we are here today to fuel that transformation of Enterprise India. And we are extremely excited about the limitless possibilities that we are going to see.
Okay, all right. A couple of targets then. If I look at your total, I think you'll have 10 million square feet. You could correct me on that number. And it's moved from 6 to 10 million square feet in the last few years. Where is that number headed? And also number of seats. Currently, I think the capacity is roughly around 200,000 odd. So what would the ambition be? Not in the near term, but say 3 years down the line.
So our growth trajectory has been quite fast. If you look at our growth, as you rightly said, 6 million has moved to 10 million already. Just in the last 3 months, since we've declared this in our RHP, we've signed an additional 1.5 million square foot, moving our total asset under management to 11.5 million square foot. If you look at this space, Nigel, it started off about 8 years back. It's grown to 88 million square foot across India.
Yeah.
This industry generically has been able to grow faster than traditional office spaces. If you look at the projections, CBRE has said that this industry will grow to almost 140 to 147 million square foot in the next 2 to 3 years. So the potential is really, really wide. We have been able to become the largest managed campus operator in the country today. We have over 50 centers. We have over 10 million square foot of space, which is already operational, and are present in 15 cities. Our focus is a little towards mid to large enterprise clients, where we cater to their requirements of over 300 plus seats. And that's the reason we've been able to scale faster than anyone else in the market, because we take large individual buildings, convert them into campuses, and give it out to large enterprise clients.
Gentlemen, morning, and congratulations, as Nigel said, you've come into the market. Nitesh, if I can ask you, what are margins like in this business, and where are they now? What do you aspire them to be? How can you grow them? What are levers here?
So if you look at our trajectory, in the last 3 years, margins have grown by almost 3.5 times. Our adjusted EBITDA, which stood at 35 crores in FY23, has grown to 172 crores in FY25, with a base increase of from 6 million to about 10 million square foot, and a revenue increase of only 1.7 times, from 700 crores to 1,374 crores. So while the revenue has increased by 1.7 times, our EBITDAs have increased by 3.5 times in this. The growth potential in the industry, as I said earlier, is to scale this up significantly. 147 million square foot is also just a drop in the ocean. As Harsh mentioned earlier, we are becoming the office to the world. The demand, if you look at in India for office spaces today, just the first quarter of this year had more than 48 million square foot of absorption.
Yeah.
So this
I wanted to come to that. So what are margins now
So our margin last year was at 12.5%.
Okay.
The margin has seen a steady growth trajectory. But the real strength of our business is not in our margin. We are a cash flow strength company. If you look at our margin and compare it with the cash flows, it was actually 240 crores. The trajectory that we've been able to demonstrate during this period has been on an upward curve. And every business, when you start to seed, it initially requires a lot of investment to build it to a critical mass. Once you've reached that critical mass, that's when you start to see enormous profits.
Okay,
So
just to office to the world, just last question, Surabhi. GCCs are the big growth driver, right? Captive centers. You have them as customers?
We service a lot of GCCs, but how I would give the sectoral mix is that India, about 55 to 60% of India's commercial demand comes from IT, ITES. For Smartworks, that number is 42 to 45. We've not only focused on IT, ITES, but we've also diversified our sectoral base by getting companies in manufacturing, healthcare, BFSI as some of our clients. So we've really distributed our client base across all sectors. And while GCC is seeing a significant amount of increase, but even Indian companies, homegrown startups who have reached a certain size are taking a lot of office spaces.
Okay. I just have a very small, few quick fire, like specific questions for you all. You said the company is throwing up about 240 crores of cash every year. Part of the issue proceeds are being used to retire debt. How much debt will you be left with, or will you be able to pay off everything, with the fact that you have cash and you've got the IPO proceeds? If you could just start there, just give us clarity.
Once we repay the 114 crores, the company will be net debt positive. What that means is that we are not going to be debt free, but the company is going to have very healthy cash balances. And we are repaying debt.
How much debt will you be left with?
We will be left with a debt of close to about 200 odd crores.
Okay.
And we are repaying debt in a very aggressive manner. And the company's growth trajectory is also starting to see massive revenue creation. In 8 years, which includes 2 years of COVID, today we are at about 1,350 crores of rental revenue.
Sure.
When you juxtapose this with one of the largest real estate companies, which has a legacy of 80 years, their office rental revenue is about 4,000 crore.
Okay, so you after this whole exercise, you'll be left with 200 crores of debt and roughly 240 crores of cash. Now I just want to come to that, the model itself. How much of your campuses are owned by you and they're assets on your books, and how much are on a lease rental model? I mean, what's the thought on that going forward?
We're a completely asset-light model.
Totally asset-light.
We do not
So you won't be owning any of the assets.
We take it on long-term leases. That's the reason with only 500 crores of equity infused, we've been able to scale up so quickly.
Okay, so just what is typically the tenure of the leases that you take for these assets and the tenure of the contracts that you sign with your clients? I mean, typically, is it like 3 years? And how frequently do the contracts come up for renewal?
So our tenures with our landlords are towards 15 years, where we have a 5-year lock-in. So post 5 years, we have the ability of moving out.
Okay.
But the total tenure is about 15 years. On the client side, we do more long terms because of our focus on mid to large enterprise clients. 63% of our revenue comes from customers who are taking 300 plus seats. When a customer takes more than 300 seats, they are happy to give you much longer tenures.
Which would be how
Our
many
average
years?
tenure is about 50 months on the customer side, right?
Okay.
So it's long tenures on the customer side, but over and above that, our retention rate is as high as 86%. So even after that 50 months, 86% of the customers end up renewing with us.
All right. Out of curiosity, as you'll mention, with regard to the largest real estate company and the likes, you're welcome to the stock market and good to see the IPO. But were you all approached by anyone to buy you out? Or, instead of listing, maybe someone proposed writing a big check to you all? Did that happen?
We have approached people to buy them out. It's a very unique model that we've created in a very fast-growing space.
But you all were not approached?
We've never.
However, having said that, we today are backed, while the promoters continue holding a majority share in the business, we are backed by a very large minority investor, which is Government of Singapore-backed Keppel Land, who own a 19% stake. They are very long-term on the business, so they in fact reduce their OFSI, so they are going to reduce to about 15%. And the company also has a list of marquee investors who have not only supported us, but reinvested throughout. So we have Madhukela Family Office, Jagdish Master Family Office, Hexaware, Polycap, Deutsche Bank. So that's how we built a great coalition, and we are very excited now as we go to the next
More details when you're list. We'll pull out some more numbers from you all, but thanks a lot for joining in and giving us all of those details.
Thank you so much for having us.